Two bills. First one is Senate Bill 673. 673 is a bill that we talked quite a bit about, various elements about it last year. It has two parts to it. One is, the first part is how do we handle the FUTA tax, the balance that we as a state owe to the federal government for monies we borrowed from them during the recession to bridge a gap in the dollars that we had versus the dollar we needed for unemployment. At one point in time, the balance on this was well over $500 million. Now, the state has made some progress in trying to pay that down, but one of the ways they're paying it down is they are assessing employers a per employee assessment to help settle this FUTA tax assessment. Those assessments go up $21 every year right now. Currently, the assessment this year went to $63 if we don't per employee. If we don't get this settled by January 1st of next year, it's going to go to $84 and so on. It's creating an enormous burden on especially some of our smaller employees, franchisees, people that you can imagine that would have larger turnover. Businesses such as ours, we have very low turnover, so even though we have a FUTA tax assessment, it's not as big as it is in some other industries. So what this would do is take the portion of the debt that still remains, freeze where the assessment is now on current employers so they don't continue to have the $21 escalation, and bond that difference and pay that off over a period of years using the assessment frozen at where it's at instead of continually raising it on Missouri's employers. Missouri's employers need money to expand and grow their businesses in other ways, and this would be a much favorable interest rate if we were to bond it based versus the interest rate we're paying the federal government right now. So step one would be to bond the outstanding balance. Step two would be to tie our unemployment availability weeks to the state's unemployment rate. This would help prevent this problem from happening again in the future. Several states have adopted this, several more are looking at it, and basically what it would do is it's a stair-step system. The high would be if we were at 9% as a state unemployment or higher, the unemployed individual would qualify for 20 weeks of benefits, and if we were at 5.9, 6% or less, basically they would be down to 13 weeks, and there's various tiers in between that. And the concept is the better our unemployment rate is, the more the job availability is, the less time that person should need unemployment benefits. So it's a two-step. First is bonding. Second is try to put something in place that prohibits this in the future. I'll say in closing, before we listen to some witnesses, I know that Senator McKenna is working very hard, Department of Labor, to work with the governor's office to try to address the first portion of this, which is the debt that we still have to the federal government. They are trying to put some things in place to help retire that debt later on this year. I would appreciate their efforts to do that. I would also say, though, that should this happen in the future, it would be nice to have this mechanism in place so we don't continually go through this as a state. We all hope we don't hit those types of times again, but it would be nice to do it. The second part of that is the Missouri State Unemployment Council, which is made up of state employees as well as independent members, have suggested to the governor's office a few times over the last couple of years that they bond this balance and retire it and implement this plan. But so far, the administration has not been in favor of doing that. And in that time, our employers have continued to pay these additional assessments. If we would have done that a year or so ago, we would have saved Missouri employers hundreds of thousands of dollars, and they would have been able to redeploy that capital in other areas of their business, which would have been much more beneficial to the economy.
We've been before the General Assembly for several years now, ringing the alarm bell of the unemployment insurance trust fund and the deficit. And the deficit is significant. So we started out in 2011 with a $21 surcharge. That doesn't include interest. Then last year it went to 42, it's 63 this year. Last year alone, Missouri employers paid $92 million in FUTA tax credits, the loss of the FUTA tax. So it's basically, in essence, a federal tax increase to repay those, and that doesn't include the interest. This year alone, it's $140 million. As the senator said, the projections came back in January, so just a few weeks ago. The projections show that we'll pay off the balance at the end of this year. We will have a balance in the fund of $3.9 million at the end of this year. If we don't borrow any money and the projections are accurate, then the employer community will not have to pay the additional fee next year, which is $186 million. So you add all that up over a 4 or 5 year time period, that's about $500 million, $500 million in penalties and fees that employers pay. And I will tell you, they get notice of this in November. Most of them are busy running their business. They have no idea that this penalty is coming, and it comes, and they have to pay it in January. So they've had no time to budget for it. And it's a significant burden to all employers, regardless how big or small, regardless of what industry you're in. But particularly the small businesses are being hit really hard. And it could be the difference of keeping your door open or not. So we think it's important. Bonding is good for a couple of reasons. First of all, it allows you, it's a short-term bond. Other states have done it. Texas is one that does it regularly. And you bond for 3 to 5 years. So to put it in perspective, let's say you were going to buy like a Ford F-150.
Got a girl.
Right? So I'm sure if you were going to buy a Ford F-150, most of us probably couldn't pay for a Ford F-150 in year 1 or year 2. So most of us like to pay that off over a 5-year period. So this actually is a cash flow issue for the business community. They've got to pay it back, but it gives them a longer amount of time to pay it off. The second reason why it's important is because you actually pay, right now with the interest rates of where they are, about half the interest that you would pay through the federal mechanism. And the third reason why bonding is attractive for the business community is because when you're paying this money back through the loss of the food and tax credits, you don't get credit for that in your experience rating. But if you bond it, that money that you pay actually goes back to the business and they get credit for that. So those are very good reasons why we want to bond. We have approached the bonding with several different members of the BUF board that determines a bond and expressed our interest several times over several years. That has not happened. I think it's important to put a trigger in there to try to do bonding to save the employer community. The other portion of the bill deals with tying the benefits to the unemployment rate. We think that that's just common sense. This isn't new ground that we're covering here. 2 other states currently do this, Florida and Georgia. They've found it very successful. And if you look at prior to the recession, so the recession started in 2008, if you look at prior to that, so 2007, the actual average number of weeks that someone claimed unemployment was around 15 weeks. So that's significantly less than what employers currently pay into now with the 20-week maximum. So.